Hi everybody, this is going to be a review for two trades that were discussed in the live trading room last week. I believe there is a good lesson here to learn, and these trades are very similar in price action movement. Before we go into the setups, I just want to show you the two types of breakouts that I've seen over the years. I classify these into either a slow break or a fast break. First, we're going to be taking a look at a slow break. What I would call a slow break is when price comes to a key level that we're looking for on an intraday basis, and it retests this level a couple of times before the breaks actually happen. When I see a move like this, I would prefer to enter on a pullback because it gives me a much better entry, and also it gives me time to find a good stop loss. Normally, I would put my stop loss at the last swing high or swing low before the break. So in this particular example that you see here, I would be putting a stop here, or if I wanted to be a little bit safer, they'll be a little bit high up. And because these moves are slow, it does give me a lot of time to plan. It could be 2, 3, 4 candles after the break has confirmed before the entry comes into play. So there is a lot of time, and I would prefer to take the time to see if I can get a good entry and a good stop loss. The second type of breakout is when price comes straight through the level very cleanly and there is no pullback at all. So in this example here, you can see price coming down to the level that we're looking at, and it goes straight through. There is no first, second or third test whatsoever. So for a fast break setup, the way that I've been doing it previously is that I would enter straight away at the break, depending on the shape of the candle that breaks the level. So ideally, I would like to see a nice strong break. If I'm trading short, I want to see a strong candle from sellers, and vice versa. If I'm trading long, I want to see a nice strong push from buyers. Once that is confirmed, I'm going to enter in at 50% of my normal size. So for example, if I'm trading $80 per trade on this particular setup, then I would put in a half position, a $40 position. The stop loss is going to be extremely tight. It will be just a couple of pips above the breakout candle. And this is why the breakout candle is extremely important. It does have to be a nice, strong, clean break. It cannot be messy, because usually a messy break means that there could be a strong bounce back. And if I'm using the high or low of the breakout candle as a stop loss, it's not going to be very safe if the break is not clean. Let's have a look at New Zealand CHF first. So this was the trading plan that I posted on Tuesday's PIP report. We're looking to short this pair on this particular day, either if it continues to rise up to here or if it breaks below yesterday's low. What actually happened is that it broke the low from the day before, but it did it in such a fashion that I would call it a fast break. As you can see, price comes down. There was no retest, no bouncing from the level at all. It comes straight through. And if you recall, I tried to get in on this trade on a pullback. Unfortunately, I was a couple of pips short. It never came back to the break level. Instead, it kept on going and it got to my target within 3 candles. I want you to see the break candle, this candle here. Look at that candle, just that candle. It tells you sellers in control. And that's what I mean by a quick break, but it also has to be a strong break. If I could take this setup again, I would be putting in a position immediately after the candle closes. My stop loss is going to be very tight, just a few pips above the break candle. So be right here. And target, I would normally aim for 2 to 3 times reward to risk. So this was a trade that I had missed because I had traded it incorrectly. I have not seen this setup for quite some time, and I just didn't remember the way that it should have been traded. So fast forward to Friday, where we had one trade that is very similar on the pound CHF. Here we're looking at buyers pushing price up, heading to previous day's high and go straight through it. The break candle here is a little bit different from what you've seen previously. It is still a strong candle. This is 90 to 95% strong in terms of buying power. It closes higher than the level we're looking at as well, so that's always a plus. If I could go back in time and trade this, would be again to enter at half position right away. Stop loss would be just a couple of pips below the break candle, and target 2, 3, I think 4 to 1 here would have been hit easily. So these are the two examples of what I would call a fast break. We need to be learning from this, and we need to be applying this in the future when we see a type of fast break move. Because as you can see, when it does break on a fast type, it breaks cleanly and it goes very, very quickly to target. So you have to be prepared for that scenario where a fast break happens. Thank you very much for watching, and I will see you in the next trade review video.